It's the opposite. You think you...
Guys, the heavyweights are back. Guys, Monday evening, 8 p.m.
8 p.m.
Glenn, good to be back with you, mate. It's been a while since we've sat down.
Yeah, look, we I think everything's back to front. I got to move my tie. It goes the opposite way.
There's a rumor we're back by popular demand. Is that true?
No, it's non-rating season now. So, you know, like you'd be watching Friends and Melrose Place in the winter, and then there'd be repeats of Goma Pile or F3 or something, or Neighbours.
We're in the middle or towards the bottom of that spectrum?
No, we're in the Christmas.
We're down there. We're a Christmas special. Well, guys, look, thank you for joining us. It is, of course, Monday evening. Nova News. Glenn, fix your tie up. Seriously, is this the first time on camera?
Yeah.
All right, guys. While Glenn's getting ready, we've got a good topic for you tonight. As we're close to closing out 2021. What a big year for real estate, and we're going to talk about houses versus apartments. What's happened in the market between the two, what that means for you as a property owner.
So when we're talking about houses versus apartments, we're really just talking about what product or what type of property has seen the most growth over the last decade.
Yeah, spot on.
Can you remember a decade ago, Steph?
Oh, I can actually. A decade ago, it's probably similar. I just had a little bit more hair.
Did you? How many kids you had a decade ago?
Oh, I didn't have any kids. So it was easy.
There you go. Now you got 3.
That's it. Who knows? Next decade, another maybe 6.
6. Okay. All right.
No. How about you, Glenn?
I had one a decade ago. I've still got one now.
Excellent. Good
Just
man.
A bit bigger.
Like
So
good.
Houses, Steph, apartments, Northern Beaches.
Yep.
Let's look at our core market, DY.
Yeah.
What has performed the best?
Excellent question. So if you're in a house, obviously there's been a lot of growth this year, but if you're in a house, I'm going to bring up some stats just now to run by you guys to show you exactly how we've grown. Glenn and I have tried to keep it towards suburbs that have got both a combination of apartments and houses.
No doubt you and I have grown in the decades.
More than a house.
Taller.
All right, here we go, guys. So DY, let's have a look at some DY statistics. So if you bought a house in DY,
yes,
10 years ago, today a house in DY has a median value of $2.74 million.
$2.74 million.
That's an increase, a whopping increase of 205%.
Okay, so the old adage was every 10 years a property would double, so that would be 100%.
Yeah, that's right.
So it's doubled and doubled again. So it's realistically doubled in 5 years, which is unprecedented growth. I haven't seen that growth in my lifetime in real estate, which I started in 98.
Yeah. Wow.
So, that's a lot of growth.
Yeah, ton of growth. But let's talk about units as well. So DY, over 200% growth in the housing market. Apartments jumping 128% over the same 10-year period. Say 130.
So still doubled. Still So what do you put that down to? That the disparity between units and houses?
Well, I think something we'll touch on later is that disparity, but I think the difference between units and houses, it's a good question, Glenn. I really wasn't prepared for it. But what do you think? I'll think about it while you give me your take on it.
Well, I think in a suburb of the Northern Beaches where we don't have access to, vacant land.
Mm-hmm.
So there'd be suburbs, and a suburb in Sydney, Oran Park. You used to go for the car races. Out there, they're able to do a subdivision.
Yeah.
And then there's vacant land behind that, do another subdivision, another subdivision, another subdivision.
So help keep those prices maybe a little bit more.
Yeah, but here I think most of the Northern Beaches was sort of developed probably no later than about the 1980s.
Yeah, I'd agree with that.
The harder areas to develop in the Northern Beaches are up on the sort of steeper slopes around Newport, for example. They would develop probably a little bit later. The flatter areas and close to the Manly Wharf a little bit earlier.
Yep.
But they've been all gone. So except for a few market garden subdivisions in Warriewood, there's one actually named after you. It's called Big Head Boulevard.
best street in the suburb. Don't listen to
No,
Glenn.
it's
Everyone
called,
wants to live there.
it's called Boogaloo Street, and they named it after Steve because he was the lead agent on that development. So that was about the only one. There's some in Ingleside. So it's very, very, very tight, and that's felt with it, right throughout Sydney where you can't find more available land. Units we can always build vertically, so we can go higher and higher and higher on the same land size.
What about this idea, Glenn? I don't know. I'm just talking out loud now, but I own a property. My partner owns a property. We get married. We sell both of those apartments, and we're combining that capital growth to jump into a house. That could have been a factor in.
Yeah, look, I think Sydney's always been expensive. It's probably a little bit of a controlled market. We have very slow development processes in Sydney. We're sort of hemmed into the east by the coast and to the west by the mountains. We can't sprawl out hundreds of kilometres from the city.
Yep.
So it's always been a little bit more difficult, especially in the last 40 years, to buy a house.
Absolutely.
So what other areas have we
Let's
seen
talk
this
about
pattern?
So I mean that's huge for DY to have a 200% increase over 10 years. Is just massive. But let's try to. I'm going to work our way down, if I can say down from the beaches. So I'm going to start at Mona Vale because it's got a good combination of apartments and houses. Mona Vale houses up over the same 10-year period, 180%.
Okay.
Apartments are up 163%. So Mona Vale's done quite well.
So it's a little bit closer.
A little bit closer. I think the reason being, and I live in Mona Vale myself, is that there is actually a big influx of buyers coming from Warringah and Ives, probably trading out of the house and paying good money for a good apartment in that area.
You've also, I think, it's a bit skewed, that statistic too, because other than, a few streets in DY, you got Linwood, you got Prescott, you got Bennett. There's not a lot of house streets that aren't on the headland. Headland attract views attract money.
Yeah.
So it's a little bit skewed out. But Mona Vale shows that in an area of houses and units, it's kept pace. Bearing in mind, but that a lot of the unit developments in Mona Vale are really expensive. Down on the golf course, down on the beach.
Yeah.
Once again, you're probably not getting a great sample right across. But what you can see is if you can, stretch and get a home, in the long run, it'll outperform an apartment.
Let me jump to Narrabeen. So Narrabene's got a good selection of real estate, similar to what you were just saying, Glenn. A lot of apartments, but even some houses still sitting along that Lagoon Street, Ocean Street, Lyle, Tourmaline, those kind of streets. Houses are up 184% over the 10-year period.
Yep.
Apartments up 133%.
Yeah, so once again, it's a little bit closer.
Yeah.
It's a little bit closer.
Let's jump to Collaroy. Houses 197%.
Okay.
Again, not so many houses if you take into account Collaroy Basin.
Sure.
Probably where the majority of those are. Apartments 137. So I mean, I can see if I took an average, probably houses are up anywhere from 185 to 200. Apartments seem to be sitting around that 130, 140.
And I think if you look historically, there's always been a greater growth in houses than apartments.
Yeah.
Freestanding Torrance title houses. I think just with DY, because the sample of houses is a little bit small when you're using over 10 years, even though that's a long period, there's been a lot of big headland sales as well. So should you buy a house? Should you buy an apartment?
Absolutely. You should buy anything you can buy, I'll be honest with you. I do see that there is a growing difference between purchasing a house and an apartment, and it only seems to be growing, that gap between the two.
See, what I find is doing really, really well 2 bedrooms and studies, 3
Excellent.
bedrooms and
Excellent.
apartment. I sold one the other day, 2016. They purchased the property all up. It may have cost them around, with some renovations, mid 900s. Just sold for 1.55.
Wow. How many years ago did they buy that?
2016.
2016. Fantastic.
So that's 5 years they've seen 500,000.
So if I live in an apartment now, and I see that there's this growing difference between houses and apartments.
Yes.
I mean, really, you want to try to make a move as soon as possible.
Yeah, well, it's just basic maths. If $1 million goes up 10%,
Yep.
that's 100,000 growth.
Yep.
If $2 million goes up 10%, that's 200,000 growth. You're further away. You've lost 100,000. So you apply that, and also to there's probably more units in DY than there is houses, and everyone's competing for the same home. So I met a guy down the beach the other day. He was commenting to me. His name's Rocky, and he was saying to me, "Oh, Glenn, 2015, you were telling me buy this house on Griffin Road. I wish I had done it." But there's nothing we can do. We can't make a time machine yet, Steph.
Would you say, like looking at this, at the growth rate that houses have had, and taking into account what you've just said, obviously with the percentage growth, it's only going to grow more, that apartment living is going to be the way of the future?
Well, there's various people in politics that want to increase the population to Australia to 40 million. They want a big Australia. So I think we're around 26 million.
Yeah.
But 26 million is a really small population as well. And 40 million is still not a big population. I think, places like UK, Germany, all have bigger populations, smaller land. And so I think they're in the mid 50s or something like that. Correct me if I'm wrong. But I think apartment living will be, because I don't think with 40 million we can go out and have these huge regional centres. So the America, for example, has 360 million, and they have big cities, big states outside the major ones, and they have the volume to have services there, hospitals, and so on. So I think we'll still have to compact around the coast, and I think we'll have to do apartment living.
Yeah, no, I agree with you. And like you said, these 2 bedrooms we've seen in COVID, the demand for anything with a 3rd bedroom or a study has been huge. So I guess, Glenn, big growth rates, huge growth rates across the beaches. Some will call that a boom market.
Yeah, look, every boom comes to the end. I think.
Do you think we're near the end?
I really do. Buyers out there, breathe a little bit of sigh of relief. Stock levels have risen from lows of 36 properties for sale in DY. Secondhand properties are not off the plan, to 72 to 80 properties for sale now. Days on market have gone from hours to weeks, a couple of weeks now, and the market's slowing down. And it's not really a market. In my opinion, it's not really a true market, because a true market will have a boom and a bust, and it'll be a free market. This is a controlled market. Now we've got the RBA expressing that we're tightening up on lending on serviceability. We have a slow development process. We have tax benefits that allow people that have one home to buy a second home and get off their tax. So it's not really a free market, and I think that will control a crash. I think there's a lot of stakeholders that don't want to see a crash. One is the 4 major banks. You just think if people have gone out and they've borrowed 90% loans and the market crashes 20 to 30%, then the whole negative equity in their properties, and they're not going to really want to be paying that mortgage when the property's worth less than what they're repaying. Also, a lot of people, this might be cynical, in politics and so on, a lot of people with a lot of wealth, they don't want to see their assets diminish.
No.
So once again, we'll have this artificial market.
I agree. I'm glad you said that, because I don't think there's a bust coming at all. I mean, we're quite fortunate on the northern beaches. We don't have a lot of land available, like you mentioned earlier, but everyone wants to live here. So
Look,
I think
the only thing a bust will come is major financial sort of upsets worldwide that we can't control. So at the moment, we can only go really to negative interest rates. Things we can't control.
Yeah.
There's some things that are in our control. If you listen, American inflation rates are going up. That's going to put pressure on interest rates. That might reflect here, but generally, that major bust, we've been able to wiggle our way out of it. I think the main reason is that we have a high home ownership in Australia.
Yeah.
And that's where basically everyone's wealth is. So if that was to crash 30 or 40%, we might be doing Uber Eats, Steve, on the electric bicycle.
Looks like we've had enough Uber Eats, mate. We might be delivering you, mate.
Yeah, we'll be delivering them, mate.
That's
on the electric bicycle.
That's it. I was going to say, Glenn, as well. I mean, the market in the last 12 months, we've seen good capital growth. The majority of buyers, in my opinion, are owner-occupiers.
Look, owner-occupiers.
First-home buyers are there.
People
as well.
accessing inheritances and the bank of mum and dad, as well.
Yeah.
To top it up.
Yeah.
Low interest rates, low service.
The point I was going to make, there weren't a lot of, there were a few, but obviously not at the same levels that we saw investors in the market.
No, but look, I think a lot of the price rises, in just my humble opinion, if I really knew a lot, I wouldn't be sitting back here at 8 o'clock or running around, on a Saturday with a suit on. I'd be working in the city, in a bank or something. But I think a lot of the prices were pushed just because of that low stock levels.
Yeah.
I think also too, we were able throughout COVID to handle, in most cases, unemployment pretty well, and people had confidence with low interest rates to go out and buy.
Yeah.
But you got to remember there was only, for a vast part of the year, 39 properties for sale in DY. Now, I've only been an agent in DY for 5 years. I've seen that as high as 130.
Yeah.
So that once again, that pushed the prices up.
Yeah. I was going to say, like, if 2021's the year of the home buyer, is 2022 the year of the investor? I think I know we saw a lot of tenants coming out of the rental cycle based on where interest rates were, paying similar repayments or rental payments in buying a home, in paying down
the whole space is.
Do you think you'll see those buyers, as prices have increased, those buyers are now going to be capped out of the market, back into the rental cycle perhaps next year?
Look,
that'll boost the rental cycle, might bring in the investors.
Possibly. Like, it's amazing that the rental market's held up so well when you think for almost 2 years we've had no immigration. We've just stopped it. The government's talking they'd like to run immigration around 250,000 people into the country, 240,000 people into the country. The country's blossomed because of immigration. We're, except for our first Australians, we're all migrants.
Yeah.
Just some of us came in chains, and some of us were escaping war crimes.
You came in chains, mate. I can tell straight away. But interesting topic. But look, so potential next year. What do we think? We're not thinking there's going to be a bus market by no means. I think we've seen the growth that we're going to see in houses. There might be some gas still in the apartments. Do you think?
Yeah, look, I think
we'll see 200% growth.
I think next year over the first quarter, it will be pretty. Look, I think over the next quarter next year, it'll be pretty similar to now. I don't think the changes in banking will really start, and serviceability will start to hit.
Yep.
I think maybe moving into autumn, winter, if everything frees up a bit, people might take their mind off property and look more to just live their lives.
Yeah.
Travel overseas, do things they haven't done. It'll be interesting to see once immigration starts up. You know, like I've got a friend who's got a property in Parramatta. He's barely seen any growth at all. Now he was saying, look, it's an area. No, it's big supply, an area that attracts a lot of immigration. You know, it's close to the city. There's work there. There's hospitals there. There's schools there. There's jobs there. He's seen very little growth. So I think we've seen also over COVID, over this period, we've seen people move to lifestyle locations. I think we've broken the shackles of 9 to 5. I think we've broken the shackles of people working to time and not to task.
Yeah, great.
And subsequently, these areas, you know, try to buy a property in Byron Bay, Lennox Head, those sorts of areas, South Coast, Huskisson. It's as expensive as the Northern Beaches.
You're right.
So people are looking at that. So I think it will continue to be interesting into the middle of next year.
So do you reckon if you're going to put your money somewhere, those coastal, can I call them regional areas, but might be a good investment? I think there's a lot of money's already gone there, but they could be the future growth if I'm thinking I'm a buyer.
Yeah, look, I think any area that's depressed now, I actually think will have its time again. I think if you look for areas that show good value now, because there's high vacancies in apartments. If you take a 10-year approach to real estate, I don't think that will continue.
Yeah,
because they're good areas, they're on trade lines.
Yeah,
it's just that, you know, I think Mark was saying the other day, he was quoting like we've had 1 million people leave Australia and return home because of COVID.
Yeah.
We've stopped students coming to the country for 2 years. So those areas where you would have that sort of tendency, hopefully we return to normal somewhere in 2022 and move back.
Yeah, okay. Good comments. I think if you are looking out of Sydney, but transport and lifestyle are going to be the two keys to it. Because if you're only coming into town once or twice a week, good train line I think will be vital for those regional areas, and I think lifestyle will be key for those regions as well.
You know, the one thing that I'm sure of, Steve, we'll be another year older next year, and between 3 and 5 kilos heavier. That's my prediction.
Sounds like a boom market for you and I, Glenn.
A boom market on the chibapis. What are they? Chibapi, the little Serbian sausages. They'll be going down a tree all Christmas.
Absolutely. But guys, that's kind of a quick little snapshot from Glenn and I. We have a bit of fun here on a Monday night. If you've got any questions, anything we can help you guys with, if you're thinking buying, selling real estate, renting, you're a tenant, you're a landlord, anything we can help you with across Australia, feel free. Shoot us a call, shoot us an email.
I really do think that next year it will steady. I think there's nothing better than living in your own home or paying it off.
Yeah.
We manage over 1,500 properties here, and even our most experienced property managers hate that call. The owner's moving back in. We're putting, to the tenant, we're putting it on the market.
Yeah.
The kids are moving in, They want to renovate it, and you've got to move. So, if you can afford it, it may not even be in your dream area, but to have that security for your family, for yourself, you can pull through savings, with what, it looks like the country will do, will grow in population, grow in immigration again.
Yeah.
Unfortunately, it may not get cheaper.
Maybe jump in now because and like you hinted on earlier, Glenn, it is really in, maybe not at an individual level, but at a state level, at a political level, at a national level. They don't want the property market, not necessarily to not grow or to slow down, but they do not want to bust in this important sector of Australian wealth.
I know we're rambling a bit, but stamp duty contributes to the third highest form of revenue in New South Wales.
The third.
So
it's colossal.
Our hospitals, our roads, our airports, our schools, though we get national funding, partly funded by the states as well. That's also through stamp duty.
Yeah.
Everyone's wealth, their retirement,
Yep.
often is downsizing and going to something smaller.
Yep.
So for those reasons, a major bust probably won't happen.
Yep.
We did come off 10%, I believe, 10 to 12% between 2017 to 2021.
Yeah.
And then we've picked that up again.
Straight
But
away.
we'll let everyone get to bed or watch Netflix or whatever they do, and we'll see you all another time.
Guys, thank you. Thanks for joining us. Stevan, myself, Biblo, and of course the ever youthful Glenn Higgs.
Thank you very much.
Guys, have a great night.
Bye.
Bye-bye. Wait a sec, mate.
Sales meeting tomorrow.